Hey guys, welcome back. Welcome back to another session of, or rather the final session in our webinar series of going live in 30 days, right? So this is your boy Desmond, once again being your host, right? What we're gonna do now is we're gonna, whoops. I'm clicking on the wrong slides, man. All right, what we're gonna do now is we're gonna start. So our agenda for today, managing your trades and designing your strategy. Okay, the first thing we're gonna do, right, is I'm gonna close this little thing here, right, is we go into anatomy of a trade. So most people think that a trade is just your, just placing your stop loss, just placing your take profit, and they think that's about it, right? But that is not the case, right? We look at the anatomy of a trade, right? All the way from break even, partial profit, idea and validation, right? So I show you from an institutional perspective how we manage our trades, right? It's not just putting a trade, closing your eyes and praying that it works well, right? There's a lot more things that go into managing a trade properly, right? So we look at stop loss and take profit placement, how to improve them. If you ever had cases where you just got stopped out by 1 pip and then the market reverses in your favor, or maybe your take profit, the market just missed your take profit by that 1 pip, and then it goes towards your stop loss and you're cursing, you're like, oh man, why is this happening to me, right? All this is all down to stop loss and take profit placement, which I will be sharing with you guys. Okay, we'll look quickly at understanding risk and lot size relationship. How does a stop loss affect your lot size? We'll look in demo versus live trading, when to be in demo and when to move to live trading, right? And after that we start designing our trading strategy. Looking at the different trading horizons that suit you, putting things together. All that we've learned into a trading strategy, and of course at the end we'll be showing you how to get the TFA Ultimate Trade Manager, right? So it's an expensive tool that we have, right? But with collaboration with XC, you'll be able to get it for free. Okay. Now, once again, disclaimer. Really straightforward. Jamel, you are muted because I am the presenter, right? So I'm the only one who can present in this webinar. Okay. Now, disclaimer, right? Basically, CFD trading's complex. Always do your own research before taking any trades, and as usual, nothing that is shared in this webinar session should be construed as like investment advice, right? So yep, just heads up on that. Now, let me introduce myself, Desmond Leong, right? Some of you guys know me, some of you guys don't, right? I run the award-winning research firm Everest Fortune Group and the Forex Army, right? Where I do my fun little coding and trading ideas there, right? We won the 2019 and 20 best FX research and best equity research, right? My team have a bunch of CFA, CMT, and CFD accredited traders, right? So we really know our stuff. Okay, we mainly work with banks, brokers, and hedge funds, right? And over at the Forex Army, that's where I built a lot of the cutting edge indicators and EAs, right? So in this part of the webinar series with XC, what we're doing is we're in the last session of our go live in 30 days. It's also one of the most exciting sessions, right? And it's all about putting everything we learned together, right, into a trading strategy. Okay. Now let's begin. Let us begin. Okay. The anatomy of a trade. Okay. Anatomy of a trade. Most people think when you're entering a trade is just your entry, your stop loss, and your take profit, right? On MT4, when you enter into a trade, most of the time you're just picking an entry. Maybe you're thinking price is going to go up, right? You have a take profit target and you have a stop loss, which you hope price doesn't hit, right? So most of the time, right, people think this is what a trading strategy is about. You just have your entry, your take profit, and your stop loss, right? But what I want you to know is that in a trading strategy, you need to know when you're moving your stop loss to break even. So in this case, your stop loss, when are you moving it to break even, right? When to close off part of your profits, right? Do you close off part of your profits over here, Do you close off a part of your profits, or do you not even need to close off part of your profits? Do you want to employ a trading stop loss? Right. So usually in trading, stop loss is more effective if your trading strategy is like a breakout kind of strategy and trying to ride along. Maybe you're hoping something breaks out, and then you're trying to ride a long move all the way down. Right. So that's where a trading stop loss will be very useful in kind of like helping you milk your position. Right. And then idea invalidation. When do you admit? Right. So most of the time people understand the concept of moving your stop loss, right, to your entry. Right. Most people understand that concept, right? That is called break even. Right. But not many people understand the concept of idea invalidation, where you're actually moving your take profit, right? You're actually moving your take profit to your entry. Right. When you do that, you're basically saying, okay, I am wrong, and it is time for me to get out of this trade. Right. So it's like, imagine if you come down here, right? You're expecting price to bounce up, to your profit target, right? However, if price doesn't bounce up, there must be a time, and it's approaching your stop loss. There must be a time when price comes back here that you say, okay, my original idea of price bouncing, it has not worked out, right? So if price gives me the second chance, to come back to my entry, I'm gonna get out of here, by doing this thing called idea invalidation. Right. So it is actually having the humility to admit that, I am wrong, and it is, it's time for me to get off my trade and protect my capital. Right. So that is the concept of idea invalidation. All of this, right? Today we'll be covering this tree over here, right? The everything else, everything else over here will be covered in the ebook. Right. We've drilled down into more technical terms in the ebook. Right. So towards the end of this webinar, I'll be sharing with you guys how to get the ebook. Some of you guys might already have it. Right. And of course, one of the things that I want to share with you is this little handy tool that we have over here. I'm just going to open another chart window here. Erase all drawings. Right. And that is, I think my computer's a little bit laggy here. and yes, it's this little trade manager over here, right? Which we should be essentially giving out, right? So the trade manager allows you to choose whether you want to buy or sell, right? If you can pick your entry. After that, you can pick your stop loss. You can place it anywhere you want. Maybe you want to place it below this swing low here. Where's your take profit? You want to put it at the all-time high. Right? Do you want to close off part of your profit? Maybe if it reaches this level here, right? Do you want another profit level? Nah, we don't need that many. Do we want to break even? We can move it here too. Do you want to idea invalidate? Maybe if price comes down to here, we get out at break even. We don't need a trailing stop loss, right? Define trade, right? Do we want to, how much do we want to risk on a trade? Do you want to risk 1% on the trade? Right? Do we want to hide our stop loss? Do we want to put a decoy to the stop loss? Right? All of these things are possible with this trade manager, right? And when you place a trade, anytime you want to edit it, just click it. You move up and down, right? It's very simple, right? You can easily adjust levels. You can adjust the take profit. You can move it down. You can move it up, right? You can see price updating in real time with it. Yeah. So this is the trade manager, which I'll be letting you guys know how we can get it later, right? Please share the sound. No, it is the MT4 platform. Okay, I'm just seeing some questions come through. Please share the sound. Can I hear the webinar discussion here? Guys, can you guys hear me by any chance? Okay, that's great. So, Maria, I guess it's something you need to pick. You need to check your speakers or something, right? The sound is clearly working. I can hear everyone saying that they can hear me. So be sure to check up on that. All right, thanks for letting me know, guys. Now, what we're going to do is we're first going to talk about stop loss placement, right? What is wrong with a fixed stop loss? Right. So many of you guys know, right? So I'm just going to, I'm just I'm gonna move it up to here first. Many of you guys know that there are many strategies out there, right? So if you ever go to these forums like Baby Pips, Forex Factory, and you have a very simple strategy like maybe it's a moving average crossover. So once the two moving averages crossover, they tell you, okay, moving average crossover, time to buy, and place a 100 pips stop loss, 100 pips take profit, okay? And your stop loss, you just use 50 pips stop loss, okay? So many people just they blindly trade it this way. They're thinking, okay, this strategy tells me to put 100 pips take profit and 50 pips stop loss, and they just trade, right? So the problem with this is that the many institutional traders out there, they know these are the numbers that you're looking at, right? And these numbers are not optimized, right? These numbers are not optimized to help your trading strategy. Now, let me show you what I mean, right? So for example, most strategies that you read out there, they have a fixed stop loss and they have a fixed take profit, correct? Yeah, they have a fixed stop loss and a fixed take profit. So let me show you an example over here. What is wrong with a fixed stop loss? Let me explain to you this chart, okay? Now, you see this chart over here, there's one nice bounce over here, and there's another nice bounce over here, okay? So we can establish that there is a nice little support level over here, okay? There's this nice little support level. Guys, when price, if price comes down to this support level, what is it going to do? Is it going to bounce up, or is it going to bounce, or is it going to break through? Is it going up or is it going down? Sam, yes, you can. You just need to let them know. And Felix, they're both about the same, right? So I personally go with percentage. Guys, you gotta practice with me, right? Participate with me and try to answer. Do you think price is going to bounce up or is going to go down? Or what's the higher chance that might happen? Okay, we are actually getting a lot of answers coming through. For Aaron, it's going up. Gerard is going up. 60 bounce probability. All right. So a lot. Okay, Anna Maria, right? You can just post your answers in the question box. All right. Yeah, post your answers in the question box so that I can see them. Okay. Yeah, most of the time, have a higher probability that price might come down and bounce up. Okay, but one thing is for sure is that this support level is now an area of interest. People are looking at this support level. Okay. Now, people are looking at this support level, and price tends to be attracted here. Now, okay, so we first established that there's a nice little support line over here. Okay, our strategy, right? Our strategy, tells us that, okay, this can be any strategy, right? It can be any strategy you find on Baby Pips or Forex Factory, right? And you're saying that, price is going to bounce up from here all the way to the top, right? So we think that price is going to bounce up, so we buy. Okay, now, our strategy that we read from Mr. Guru, right? I'm not sure. There are 101 gurus out there who talk about their own strategies. They say that when you enter into a trade, guys, you need to use 100 pip stop loss, because if you don't use 100 pip stop loss, the universe will work against you, right? And if the universe works against you, the strategy will not work, and you will not achieve financial freedom, right? So any of that nonsense that they tell you, right? So it tells you that you need to put a fixed stop loss of 100 pips, and this fixed stop loss of 100 pips, right? It just happens to line up directly above this key support area, right? It lines up above this key support area. Okay, now let's see what usually happens in this case, right? So I'm going on to the next, I'm going to erase this, and go on to the next slide, right? So what you notice is that when price, this yellow part here is our stop loss, right? And if price starts to reverse down here, it touches this level, it touches our stop loss, or rather it touches the support level, and it bounces up very nicely, right? It bounces up very nicely, and what happens to us? We start saying, oh man, right? The universe is against me, right? Or forex trading doesn't work, or my broker stopped hunting me, right? You're thinking, how can this be true? They come down, they touch my stop loss, and they go up straight away, right? They say the market is manipulated, right? And that's where a lot of this kind of accusations come from. I mean, I'm not sure about you guys, right? But many times, many times there are many cases where your trade gets stopped out, and then once it gets stopped out, it moves, it moves in the direction that you intended it to right away, right? And this is one of the reasons, right? It's the stop loss placement, right? Your stop loss placement should not be before, right? It should not be before. It should not be before a big level, okay? The reason for that is because price tends to get attracted to these key support levels, okay? Price tends to get attracted to these key support levels. What we should do instead, right, a way to avoid this is to put our stop loss slightly beyond, right? So if you put your stop loss slightly beyond a key support level, what happens is that you notice that price bounce up, and then the trade can continue working, whether it's in your favor or you choose the idea and validate it, however, or you want to cut your losses, at least, it doesn't stop you out and straight away go in the other direction, right? The key thing here is that you just need to move your stop loss maybe from 100 pips to 110 pips, right? The important thing here is to always look at the chart, right? The important thing here is to always look at the chart and see what the charts are telling you, right? I can see a couple of you guys, right? Murhan saying that Anna Maria say, yes, it happened to you, right? Quite often, right? And it happened to me quite often too. And the reason for that is because we have to put our stop loss, right, beyond a key structural level, right? So if you note at the most basic version, it's like this, right? You're just using support and resistance, right? You put your stop loss just slightly beyond, okay? This simple technique by itself will help you a lot in your stop loss placement, okay? Now, how to remember this is very simple, right? When it comes to stop loss placement, right? When it comes to stop loss placement, always put it beyond, okay? When it comes to take profit, you always put it before. Stop loss beyond, take profit before. Okay, right? So that is the trick to it. You can see that over here, right? This is an example of how things usually work, right? In this case, we're just using very simple swing high, swing low stuff, right? But yeah, a swing high, and then price tends to come to the swing high. It tests it a bit, right? It fights. There are people fighting around here before it reverses. That's why you want your stop loss to be slightly further beyond. But for take profit, right, what usually happens is that, nice little bounce, right? It might come here, it might bounce from here, it might bounce here, but there's going to be fights over here, right? We want to get out of the trade before the fight happens, right? So we put our take profit slightly before. Okay, the line for the support is currently a line, but support is supposed to be a zone area. So how do you place on? So we got a good question from Gerard. Right, Gerard is asking that in this case, right, the support is currently a line, right? The support is currently a line over here, right? But that is not the case most of the time, right? So even if the support happens to be an area, right? It happens to be a bigger area, right? It takes up a bigger area over here, right? what I would do is I'll put my stop loss slightly beyond the area, okay? Because it rarely ever lines up so nicely as a single line, right? Sometimes it's slightly higher, sometimes it's, the line is slightly thicker, right? And what we do is we just put our stop loss slightly beyond it, right? So we got Sam asking, how many pips before, how many pips after? That I cannot tell you because 5 pips on euro dollar is different from 5 pips on pound dollar, and that's different from 5 pips on pound Aussie. 5 pips on the 1 minute chart seems like a lot, but 5 pips on the 1 hour chart seems very little, right? So you kind of need to look at the chart, right? You need to look at the chart, and you can use this thing called ATR, average true range. Yeah, I can see, Sam, you just said it, that's right. Use an ATR to kind of figure out, what kind of range you want it to use. That's good. Yeah, that's right. Roger's asking, are you taking wicks into consideration or only body of the candle? Roger, I take wicks, right? Because what might be a body, what might be a wick on one candle is a body on another candle, and it all depends on the time frame you use, right? If you use a 1 minute chart, it looks like there's a lot of bodies, right? But then if you put it on the 1 hour chart, suddenly it becomes one big wick, right? So I would use the wick. Okay, Vanisha, I can see that you say it's a light bulb moment. Thank you. Right? Yeah, these are interesting insights, which or small little things that you can use to kind of improve your trading. Okay, so Alexandra, I can see that. What is the rule of thumb that I recommend in terms of putting it slightly above or below? 10%, 5%, 3%. I do not use percent, right? Instead, what I do is I kind of look at the market, right? I look at the charts, right, and I can roughly tell that if the usual length, right, if the usual length of a wick of a spike is about this much, right? These are the usual length of the spikes over here, right? Then maybe my stop loss, I would put it slightly, just slightly beyond that spike, right? In case price really comes down there and it spikes, right? So it's just good to kind of eyeball the chart and see when the key reversals happen, how big the spikes tend to be, right? So you can roughly see this is usually how big the spikes tend to be for this pair. So I would just offset that, eyeball it and just offset it a bit, for my stop loss, right? Now, candlestick shadows can be long or short. So at this zone, if you place your stop loss beyond, is it possible to be stopped out with spikes? Is there a way? Yeah, Jared, I just explained, right? So I would look at the spikes that usually happen, and I will eyeball it, and then put my stop loss, roughly beyond that spike. That's right. And Anna Maria is asking if I put my stop loss, do I look at the daily or the weekly chart, right? It actually really depends, right? Depends on trading horizon, and we go into designing that strategy later. Okay, now let's move on, in the interest of time, right? Let's move on and go on to the next point. So stop loss placement, it's as simple as this, right? It's this is how it looks like on the chart, right? Of course, you got one big swing high here, you got one big swing high here, and you got another big swing high here. So now you have an area, right, Gerard? Oh, is it Milan? There's a big area over here, right? So if there's a big area over here, right, where would I put my stop loss, right? I'm going to ask you guys here. Is it at 0.1, which is over here? Is it at 0.2, which is over here? Where would I put my stop loss? At 0.1 or 0.2? Okay, I'm getting a lot of unanimous answers coming through. I'm so glad no one has answered one. One is take profit. Yeah, Anna Maria, that's correct. Right, one is take profit. Right, so two is a stop loss. Right, so that is correct. You guys have learned a very valuable lesson today already, and that is, this little thing by itself will allow you to optimize your strategy a lot more. Okay. Now, okay, I'm glad to see everyone has learned. Everyone has learned this really important thing. Right now, we're going to go into take profit placement. And remember, I mentioned to you that take profit placement, right, is always a case of putting it slightly before, right? In this case, you see a big level, you put it slightly before. Okay, how it looks like on the chart, right? So now we're going to an example over here, right, is that I don't think I need to go through the example, but I'll just show you guys, right? One big level here, one big level here. So this is an area, right? You can see it's a very nice area. Oh, my drawing is improving, right? It's a very nice area. And your strategy says that, we're expecting prices to go up from here, right? We're expecting it to go all the way up, to maybe to hit our take profit. But if our trading strategy tells us that we must use a fixed take profit of 100 pips, right? What's going to happen is that it places our take profit beyond, right? And remember, for take profit, we want it before, not beyond. Okay, we want it before and not beyond, right? So what happens from here is that, you can see price is actually shot up. We miss the take profit by a bit, right? And then it reversed down, right? It just shot up, missed the take profit by a bit. Over here, you can see it goes up, it missed it by a bit, and then it comes down. Okay, so that is the mistake we made, right? We know our take profit always has to be before a key area of support, before a key area of resistance, right? So the solution to this, right, is that we adjust, instead of having to put that 100 pips take profit. If we had just looked at the chart and we just adjust our take profit to 90 pips, right, you'll notice that we have hit our take profit over here. Price comes up, hit our take profit of 90 pips, and then from there, we don't care what happens after that. So the important lesson is that don't follow a fixed take profit, right? Always look at the chart and see what it's telling you. From there, you can fine tune your trading strategy so that you're not putting your take profit beyond, and you're not putting, instead you're putting your take profit slightly before. Okay, so I got some questions coming through. Sam is asking, can you please show me how to use the Fibonacci retracement the correct way, and also how to use the Fibonacci extension? I think we'll be having a webinar on these advanced trading techniques in the future, and we also have like this private trading room which we are launching next month that will kind of allow you guys to kind of learn with us as you practice all this stuff that you've learned. I will share more on that at the end of the webinar, so stay tuned until then. We got Duko asking, is it better to put two trades, one with the TP further than the first one as a runner, right? Duko, Duko's asking whether it's better to put two trades instead of one trade, right? And you just let one run. Running means that you can run, however far you want it to go. So the concept of letting a trade run, right? The concept of letting a trade run in any direction, maybe goes even all the way up or something, right? Unless your strategy has a reason for that to happen, you should not do that, right? Because once it starts running, the further it starts running from your original strategy, right, the less control you have of it, right? It might run up and down here, right? And then it starts going up here. But would you let it run if you were re-evaluating a trade at this point of time, right? So letting it run, letting a trading strategy run, is not advisable unless there is a reason that you're doing that. Maybe you're playing a breakout, right? Price, there's like a big resistance over here, and then you're waiting for price to finally break out from here. And once it breaks out, you're expecting it to run, right? Unless that's the reason, then yeah, you can let it run, right? Otherwise, you need to see what trading strategy you're using and whether it actually makes sense to let it run. Okay. Mel is asking, can you raise your stop loss on the upward movement? What do you mean, Mel? If you can rephrase that. I'll move my stop loss to the first TP. And thanks. Okay, yeah, no worries, Duko. I'm glad you asked your questions. Okay. Now, what we're going to move on to next, right? What we're going to move on to next is this. What is the ideal risk percent? How much will you ideally risk on each trade, right? Can you guys answer, right? Just participate with me and tell me how much would you usually risk on any of your trades? Okay, we got some people coming in. Bikram at 1%. You know, Alexis at 2%. Jarat at 3 to 5. We got Obi at 10%. You got Jamal at 5%. You know, Atas at 5% too. Quite a number of people. Alexandra saying 3% most probably, but we'll go to 5%. Okay, different. You know, for small accounts, max 5%. Okay. Okay, so a lot of you guys, you know, seem to be pretty conservative, 1 to 3%, sometimes 5, and the occasional 10. Okay, guys, let's go on to the next experiment, right? Let's go on to the next experiment. And Felix, that is exactly correct. We are playing roulette, right? We are playing roulette over here, right? You are given $1,000 and you need to bet on black to win, right? There are 18 red, there's 18 black, and there's 1 green. Okay, so if you do the math, you have about a 48% chance to win. Okay, you can only play 1 round, right? You can only play 1 round. How much would you bet? How much of the $1,000 would you bet on this game? Okay, we got people throwing in $200, $300, right? Some people saying 1%, so that's about $10, right? Xiang Chao saying that there's no age. That is true, there's no age, right? So some people like $10, some even $1, 2%, you know, 50-50 risk, right? Yeah, it's you know, it's some people are throwing $250, $100. Guys, you guys are saying that, you know, you're 1 to 2%, you know, it doesn't follow the way you answered previously. Right, you're all talking about 1 to 2% now. We got Cicero throwing in $500. We got Atta throwing in $100. Right? Wow, you guys are, you know, when you're in the casino, it's different, eh? Right? Okay, so we got a lot of people throwing in $100 to $500. Right? Some people say that, you know, you're going to double up till you win for Sam. Right? So it's martingale strategy. Yeah, gambling is a little bit different from Forex, right? So guys, now I have a private casino. Okay, I have a private casino and I'm going to invite you in it. And in it, I have a special roulette table. Okay, this is how the roulette table looks like. All right, it is my own special roulette table, right? There are 32 black, right? There's only 4 red and there's 1 green. You have $1,000 and you have about an 86% chance to win. How much would you bet now? Okay, we got April throwing in $800. We got Rosanna, you know, 500. Ruben throwing 1,000. Venetia, you know, throwing 40. Edwin $40. Edwin, you're only going to throw in $40. James, you're going to throw in 1%. You got an 86% chance of winning, and you're going to throw in 1%. Sam, you're going to throw in $2.86. That's a very weird number. I got a couple of, we got Aaron saying he's going all in. We got 750, we got 500. Okay, 94%. You know, we got a lot more people throwing in, you know, almost their full money, right, guys? For me, if you're asking me, you know, Felix, I'm wondering why you're only throwing in $1, right? If you have an 86% chance to win, you're going to throw in a lot more money, right? You're going to throw in a lot more money than when you had only a 48% chance to win, right? Imagine this, if I colored this red, colored this black, and colored this black, and I colored this black, okay? So the only chance you can lose, right? The only chance you can lose is if it lands on green, right? So we got 36 black and we got 1 green. How much would you bet on this, guys? James, how much are you going to bet on this? I'm curious. Edwin is going to throw in 50. You know, James, how much are you going to bet, huh? Felix, you're not going to bet? Do you think it's a dream, maybe? Right, guys, it's not about sticking to your 1 to 3% that you said earlier, right? Mel says that, you know, Trump might have rigged it, so gonna only put in $500. Right, guys, what I'm gonna do is even if you're asking me, right, I'm gonna throw in $1,000. After that, I'm gonna sell my house, right? I'm gonna throw in another $100,000, right? And then I'm gonna play a much bigger amount because I maybe I have a 97% chance of winning, right? If the odds are in your favor, right, increase the amount you are going to trade. And that is how trading is like, right? That is exactly how trading is like, right? I'm just showing it to you from a probability standpoint, right? Guys, remember I told you, if you have a simple support and resistance, maybe you have a 30% chance of being correct, right? You throw in a stochastic, right? Maybe you have additional 10%, right? You put that in with a very nice MACD or divergence, you might have another 10%, right? After that, you throw in something like Fibonacci, which is one of my favorites, right? Maybe an additional 15% to trade. Maybe you look at the Ichimoku or momentum, right? Or Ichimoku, the Ichimoku Kinko Hill, right? The cloud, and you have another 10%, right? You look at price action, right? Candlesticks, and that gives you another 5%. By themselves, right? By themselves, they will all fail. Okay? By themselves, they will all fail. But if you throw in 30%, 40%, 50%, 65%, 75%, 80%, if they all line up together, you have an 80% chance of being correct. Right? These numbers, of course, are not exactly they're not written in stone. Right? No one is to say stock support resistance is 30%. It might be 40, it might be 20. Right? But the concept is true. The more you throw in, the more things that support your analysis, right, the higher your probability of getting correct. The more, the higher your probability of getting correct. Okay? So when I was asking you guys earlier, right? When I was asking you guys earlier, how much would you ideally risk on a trade? Right? There is no super wrong answer, right? If the trade just meets my bare minimum requirement of maybe it just has 3 criteria that is met, I might risk maybe 1%, right? But if it has like 1, 2, 3, 4, 5 criteria, maybe I'll put 5%, no 3%, right? If a 1, 2, 3, 4, 5, 6, 7, 8 criteria that is met, I will put 5% on the trade. Because just like roulette, the higher the probability the more higher your probability of getting correct, whether it is out of 3, out of 6, or out of 10, right? The more you should allocate to your trade, right? Ana Maria, okay, I'm glad you see the light. Glad you see the light. It's all about risk management, right? Not all trades are made equal. Right. That is why it's important for you to always, it's not just sticking to a moving average crossover, just sticking to Heiken Aishi or support and resistance, right? It's always about learning more and more technical analysis, more and more a little bit fundamental analysis, increasing your knowledge, right? Because if you're not able to combine, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, you're not able to combine 10 things if you're in your knowledge, you only know about 2 things, right? The more webinars you attend, the more things you go through, the more you learn, right? Then you have increased it to 3, you increase it to 4, you increase it to 5. So the more you learn, right, the more you're able to combine different things together. Okay? Yes, they all need to be working together. Correct? Yeah, Audrey, I'm glad you say that you're enlightened on how to manage trade. All right, guys. Okay. Can I check if you guys? I accidentally knocked my mic a bit. Can you guys hear me properly? Okay, that is great. That is great. Perfecto. I got a question earlier. I saw. I like long and short for her. Venetia, I think you're asking for the trade manager. Yeah, later we show you how you can get it. All right, so don't worry. Okay, now let's move on to the next thing, right? What is the ideal lot size? Guys, what is the ideal lot size? Is it 0.1 lots on your MT4, 0.3 lots, or 1.0 lots? Okay, I see some people saying, 0.1. A lot of people are saying 0.1, but I like that, we got Aaron, Peter, Waylo, a lot of them saying depends on capital. It depends on how much you want. Depends, 0.3, then it's saying depends on account size and risk, right? Okay, you guys, depends on the risk level. That is correct, guys. I'm glad that at least half of you guys are saying that it depends, right? It really, really depends because there is no ideal lot size. There is no ideal lot size, right? If my account is $100 account, 0.1 lot might kill me, right? But if my account is $1,000, right, 0.1 lot might be perfect. If my account is, $10,000, 0.1 lot might be too little, right? So it all depends on your lot size, on your account, and of course it also depends on how much you want to risk on that trade. Correct? So that is the trick, right? So don't I know a lot of people, right? You have it on your MT4 every time you enter into a trade, right? You just put 0.1 lot, you put 1 lot in, right? But that is a bad strategy because you are not factoring in, what is your account size and how far your stop loss distance is. So let me show you what I mean, right? So in this case over here, right? So we have this is a trading. Let me find my highlighter. This is Kiwi dollar, and our account size is $50,000. Okay, our account size is $50,000, right? We have a 50 pip stop loss, okay, and we have a 90 pip take profit. Okay, 50 pip stop loss, 90 pip take profit. If we are risking 1% of our account, there'll be $500. If you're risking 2%, it'll be 1,000. If you're risking 3%, it'll be 1,500. Correct? Now, when I was asking you earlier whether 0.1 lot or 1 lot, right? What you need to know is that if I want to risk, like let's just say with my $50,000 account, I want to risk 1% of my account, which is $500. Right? What happens is that, as you can see over here, right, I need to use 1 lot. 1 lot will help me, right, risk 1% of my account, and with a 50 pip stop loss. Okay, so these things work together. All right, your stop loss matters, right? How much you risk matters, and from there, once you have how much you want to risk and your stop loss, then you can define the third thing, which is, what is your lot size? Okay, so it is not only about, picking a random lot size each time you trade, but instead it matters whether, if the trade is normal, I'll put 1% of my account, and just like the roulette table we played earlier, right? If it's better, I put 2%. If it's super good, I put 3% of my account. Okay, so depending on whether I put 1, 2, 3%, right, I will need to put 1, 2, or 3 lots, right? So every trade is different, right? And that is the important thing that you guys need to know. Essentially, how much you risk affects the lot size that you trade. So don't just go randomly placing 0.1 lots, 0.2 lots every time you trade. You need to have proper risk management, right? Because trading by itself is hard enough, right? So what you need to do, is you need to employ proper risk management to ensure that you have the highest chance of being correct. Okay. Now let's go on to the next thing. All right, let's go on to the next thing, and that is another question I have for you guys. Okay. Which trade is more profitable? The first trade here is a 50 pip stop loss and 90 pips take profit. Okay, 50 pip stop loss and 90 pips take profit. Okay, The second trade is 20 pip stop loss and 36 pip profit. Okay, you can see they are the same chart. One is 50 pips, 90. One is 20, 36. Okay, so which one is more profitable? Is it the 50 pips stop loss with 90 pips of profit target? Or is it the 20 pips stop loss with 36 pip profit target? Which one will make you more money? Okay, we got some answers coming in, right? We got Aaron saying it's 50-90, right? A lot of you guys saying yes, sir, say it's 50-90. First one. You got Yamal saying it's first one. You know, if it reaches your TP, at the same time, you got a bunch of people saying it's the same. Suriyan, Peter, right? Edwin's asking what's the size, right? So you know, the size is it's not whether the size, rather depends on the lot size you use. Assuming you are risking 1% of your account, right? Assuming you're using 1% of your account, which one will make you more money, right? I can see a lot of people are saying that it's the first one, right? So the problem here, right, is that if you divide 50 divided by 36 by 90 and 20 divided by 36, what is the answer? Can you guys yep, what is the answer? Is it 0.55? Yeah. It might be easier to do it the other way around. 90 divided by 50 and 36 divided by 20, right? So 90 divided by 50 and 36 divided by 20. You should get the same answer as 1.8. Okay, so they are both the same, right? They are both the same. Whether you are doing a 36 pip profit or 90 pip profit, you're making the same amount of money. And the reason for that is because you need to look at how much you're risking on the trade. Okay, how much you risk on a trade is very, very important, right? I can even have what is it, a 2 pip stop loss and a 3.6 pip profit, take profit, right? This will earn me the same amount of money too, right? It'll be 1.82, right? What really matters is the risk to reward. Okay, so let me share with you over here. It's not about number of pips you make, it's about the risk to reward you trade. Okay, now yeah, no worries, I'll catch up later. Guys, so you see a lot of Instagram traders out there, you know, they're in their Lamborghinis, they're in their Ferraris. I call them Instagram traders because, you know, they usually just take nice little photos, you know, they have a little bit of a lifestyle kind of Instagram account talking about how they're so rich, you know, and stuff. And they say, oh, I made 100 pips, I made 200 pips, you know, today I made, you know, 500 pips. Does it really matter, right? And the newbies, right? A lot of people are tricked into thinking that that is important, right? A lot of people think that, you know, making, you know, 1,000 pips is important, right? Making 1,000 pips is important, right? And if you hear a guy who only makes 10 pips, you're like, well, this guy, you know, he doesn't know how to trade. He only made 10 pips, right? The important thing is that, you know, if this guy made 1,000 pips, but at one point of time he was risking 10,000 pips just to make that money, right? It is less than this guy who, you know, who risked 10, you know, this would just give you 0.1. This guy would get you 1, right? It's a better risk to reward and it's a more profitable trader than many of those Instagram traders out there who just talk about making 100 pips, 200 pips. Next time you see one of that, do me a favor and just scold the guy and say that you don't know what the hell you're doing. It's not about the number of pips you make, right? That is a nice story that a lot of people like to tell, right? A lot of newbies try to look out for how many pips you make, you know, and they think that that is very important. But the professionals know it's not about the 90 pips take profit, which I showed you earlier. It's about the risk to reward. That is important. Okay. Merhan, right? It is not 99 divided by 50. It is 90 divided by 50. Okay, I think I got the numbers wrong. Okay. Now, guys, okay, we're gonna move quickly, right? We're gonna move quickly, as you know, we actually amazingly we are almost at our 1 hour mark already, right? We're gonna talk a little bit about demo versus live trading. Okay, demo versus live trading. Okay, so what I recommend you guys to kind of consider is that when it comes to trading, right? When it comes to trading, there you can open a demo account and you can open a live account. A demo account, you use it to make platform mistakes. Okay, you use it to make platform mistakes. You use it to test out trading ideas which you cannot automate. Okay, the reason for that is because, you know, when you come into MT4, like over here, right, and you're thinking, oh, you know, how do I trade? And you accidentally click this button and you're like, oh my goodness, right, I have entered into a trade. I don't know what I need to do. You know, what is this? You know, what is this? You know, and then you think that to close off the trade, you should press another time, and then ends up taking 2 positions, right? And you start freaking out. That is okay if you're on if you're on a demo account, right? You make your platform mistakes on a demo account. Okay, and you practice your little trading strategies on a demo account, right? Just those that you cannot automate. Okay, so that is what I feel a demo account is primarily good for, right? But it is bad if you really want to practice your trading, and it is bad if you want to train your psychology, right? A $100 live account is better than a $100,000 demo account. When you're trying to train your trading psychology, when you're trying to train real trading, right? You're losing, if you're losing $10,000 in a demo account, you're just like, doesn't matter, you know, I'll just reset the account. But if you're losing $10 on your $100 account, you're freaking out. You know, you can't sleep at night. You know, for some of you guys, it's a very different, you know, it's a very different ball game, because you actually get to experience this thing called the sense of loss, right? And the sense of loss, it really affects the way you trade. You know, sometimes you just close out your trade early. You know, or you hold on to your stop loss. You increase your stop loss, you know, until it's very wide. You know, or you take your profits early, right? So that is a problem with demo versus live, right? For demo, it is bad for practice and it's bad to train your psychology. For a live account, it is really good for you to practice and it's really good for you to train your psychology. But it is bad if you're trying to, you know, if you're just getting used to the platform, and like earlier, you know, you just made a couple of platform mistakes. And if you're testing random ideas, please don't test them on a live account. Please test them on a demo account. Okay. Now, I got a question from Sam. He's asking if I hedge my position. Okay. Do I hedge my position? Right. So when someone says, do you hedge your position? They're asking if you, for example, I am buying over here, right? I bought 1 lot. Then, you know, the market doesn't go in my direction. I decide to sell 1 lot. Okay. I buy and I sell, right? This is called hedging. Okay, I have 1 lot that I've bought and 1 lot that I've sold. How many of you guys here use hedging? How many of you guys use hedging over here? Yes, here I think you can look at the XC YouTube page. You can find it, right? Okay, you know, some people tested it. Some people say I do with correlated pairs, right? Correlated pairs maybe is possible, right? But never hedge. The reason why I say never hedge is because for most cases, this is a demo account, so you don't really see it. But in most cases, you end up paying double the commission. If you buy 1 position and you sell 1 position, it is the same as having no position in the market, right? You end up committing more of your margin to trading, right? You end up you end up pay more commission, you end up paying more swaps, you know, and you pay a lot more things, you know, if you try to hedge your position. So I would stay out of hedging, right? So what about leverage? How much do you use leverage as beginners, right? Leverage is a double-edged sword, right? So we got a question from we got a question from Aaron asking, how much leverage we should use, right? And XE offers leverage up to 1:500. Okay. I think it is okay to have a high leverage. It is okay to have a high leverage because let me ask you a question, guys, right? If I have one account with a leverage of, oh, where's my pen, man? If I have one account with a leverage of 1:100, and I have one account with a leverage of 1:500, right? I buy both of it. I buy, right? I buy one lot of euro dollar, and I buy one lot of euro dollar. Which one? I buy them at the exact same time. Which one will make more money, right? Will it be the 1:100 here, or will it be the 1:500 here? Which one will make more money? Guys, you need to guess, right? I see a lot of people saying that, it's a 1:500, 1:500, then that's a good answer, right? Alexandra, that's a good answer. Peter, that's a good answer too. A lot of people are saying 1:500. Roxanne saying is 1:100. Edwin saying is 1:500. Roger saying that, option number 2 will help you win more and will also help you lose more. Well, the thing is, they are exactly the same. They are the same. Just that 1:100 allows you to use, requires you to use more margin. It requires you to use more margin. 1:500, uses less margin, or rather, you have more margin to trade with. Okay, so that is the thing about leverage. It has nothing to do with so-called how much money you make when you trade. When you trade one lot, either side you make the same amount of money. Yes, but it's exactly correct that you can have what Christos mentioned, that you can have 5 times more positions at 1:500, and that is you have 5 times higher chance over here. You got a 5 times higher chance to make more money, and you have a 5 times higher chance to lose more money. Okay, so you end up playing a much more volatile game. So it's if you don't abuse this 5 times chance, it is okay. But if you abuse it, you get greedy, right? That is where you start to lose a lot of money, right? So I can say that it's perfectly fine for you to go with a 1:500 as long as you have proper risk management and you have proper trade management. Don't go in and risk like 20% of your account on a single trade, right? Use the probability, let it work in your favor. Put 1:2% on each trade. If you're not confident, you can start off with 1:100 leverage first, right? Even better, again, use 1:10 leverage maybe. If you want to like enforce yourself to trade, don't over leverage into your positions. Okay. Now, no, James is not good for. Okay, technically yes, in some way it is, right? So okay. Now that we've touched on demo versus live, I remember one guy asked earlier, how long do I I think it was Anna Maria, right? How long I recommend someone to be on demo before they move to live? I would recommend you to move to a live account as soon as possible, right? But you don't need to move to a live account which has a lot of money, right? You don't need to move into a live account with $10,000 and throw it in there and start trading straight away. You can move into a live account, and maybe if you have like 10,000 in an account or something, right? Or you just need to take about $1,000 out, or maybe you take out $100 and you practice on this $100 first. You practice on this. It has to be small enough. It has to be small, but yet it has to be big enough that it affects your trading. Like you cannot trade on a $1 account. It's practically impossible, right? But you can trade on a a $100 account. You can trade on a $1,000 account, right? Still small still a small amount, but at least you practice a bit, right? You practice a bit and you feel what it feels like to have real practice and really train your psychology, right? As soon as you can, move to a live account, right? And start practicing with a small amount, okay? Now, okay, Anna Maria saying that, you're a beginner, you need to learn more, right? Don't worry, XE is here for you. Over the next few months, we are going to have, throughout the entire year, we're going to have a webinar series, and launching next month, we'll be having an a live trading room, which we are revamping and relaunching, right? It'll be pretty cool because I can guide you all as we trade the markets together. Okay. Now, what we're going to do next is we need to design a trading horizon that suits you. Okay. There are mainly four different kinds of traders out, four different kind of trading styles out there, right? There is a scalper, right? Scalpers tend to, get in and out of their trade usually within a couple of minutes. If you're a day trader, right, you usually trade, what we call intraday. Means that if you open a trade today, you tend to close it at the end of the day. Okay. If you're a swing trader, your positions tend to be held for a couple of days to maybe even a week or a few weeks. And if you're a position trader, right, you tend to hold your position for a long time to come. Now, how we decide which trading style you need is it all depends on like the time commitment you have, right? You cannot be a scalper if you only have 10 minutes to trade a day. Okay, so can you guys share with me, right? Share with me how much time in a day do you have to trade? Do you guys have 1 hour, 4 hours, 10 minutes? Oh, we got Anna Maria with 4 hours. We got Dan with 3 hours, Sam to 1 to 4, 4 hours, 1 hour, 2 hours, 3 hours, Roxana with 1 to 2, Venetia with 2 to 3, intraday several hours. So most of you guys, it seems like you got 1 to 4 hours. Osamurma, you got 5 hours, nice. Mel has a little bit of time in the morning. Most people spend 1, 2, 3, 4 hours, right? None of you guys have less than 1 hour. So if that is the amount of time you spend, right, usually if you're a scalper, you're going to need something like at least 2 hours, right? 2 to 4 hours in a day to look at the markets, right? If you're a day trader, a minimum of 1 hour is fine. Anything more than 1 hour is great, right? If you have super little time, right? If you're less than 1 hour a day, right, you can get this, swing trader, which is less than 1 hour a day. Position traders, if you have absolutely no time to trade, you have close to 0 time to trade, then it's better to take a long-term position. Seeing that most of you guys are in the region of 1 to 4, 1 to 4, even 5 hours, right? You can actually focus on this kind of trading strategies, right? Scalping and day trading, right? So this allows you to be a lot more active in the markets, right? And it also doesn't compromise, right? Because you have enough time to focus on this, right? If you only had 10 minutes to trade, right? 10 minutes, I would not say scalping is correct for you, nor even day trading. You need at least 2 to 4 hours for scalping, at least 1 to 4 hours, for day trading, depending on how intensive it is, right? Sam, I also love swing trading. Personally, if you have more time to trade, it doesn't mean that you cannot take swing trading, right? It just means that, if you have more time, you can basically, if you have like 4 hours, right, you can do everything, right? You can do everything, right? Just that, which are the minimum requirements for each kind of trading style, right? Danielle, yes, the webinar will be recorded, right? And probably a couple of days later, it'll be on XC YouTube page. Okay. All right. So now that we know roughly the so-called what kind of trading horizon we can use, what I recommend you to do is to start designing your trading strategy. Okay. Now I'm going to share with you a few tips to design your trading strategy better. Right. The first tip, right, is definitely that you should increase your odds. Remember, we're not talking about, we don't want to be 50-50. In this case, maybe we are 48% over here, right? We were 87% over here, right? We were 87% over here. Okay, so first thing we want to do is we want to be in this space, right? We want to increase our odds. How do we increase our odds, right? I've just shared it with you guys. You can increase your odds by using stuff like supply and demand, right? You can combine indicators, right? Stochastic, RSI, moving average, Ichimoku, using trend lines, using channels, using price action like candlestick patterns. Some of the indicators I passed you guys, whoever got the price action indicator from last week, I have a new update file. So please let me know if you need the file again. I'll send it over. I'll find a way to send it over. Okay. So we got a question from Roger, right? Saying, okay, scalping is stressful for him. He's saying, are there scalping strategies more jumping in and out by watching the charts, right? Roger, I wouldn't recommend it, right? It depends on the indicators you use, right? So Roger's asking if there are any scalping indicators, so-called indicators for scalping. There are a lot of them, right? But it can be very stressful. So you must have a solid trading psychology, trading mindset if you want to do scalping, because sometimes people only need to face the fear of loss once a day in a trade. But for scalpers, when you get in and out of the position so fast, you need to multiply that by 10 times throughout the day. So you need to have a very strong trading psychology, right? Ferry is asking, can various algorithms in artificial intelligence help in trading? Yes, we happen to be building some of that. So keep your eye, keep an eye on this space, right? Especially XC webinars as we start to explore a little bit more towards algorithmic trading at a later stage. And okay, Mel, I can't exactly answer that right now. You can rephrase that and maybe I can answer that slightly better, right? Guys, so yes, it's all about combining indicators, combining different stuff to improve the odds of your increase your odds in getting profitable trades, right? What I want to let you know is that once you combine your odds, it is very important for you to be called avoid the known unknowns, right? So XE has this little calendar, right? I'm just gonna click on it, right? And it'll open up for me, right? So this economic calendar, right? When it opens up, what I always do is if I'm trading today, I will click today, right? And I would look at the high impact news events, right? So it's nice that the events that have passed are grayed out, and the upcoming events are in white. What I want to avoid are what I call the known unknowns. Known unknowns are basically this kind of high impact news events. I know that it's going to come. I know that it is approaching in a couple of hours, the BOE interest rate decision, but I do not know the outcome. I don't know how the markets will react to this, right? And these are what I call known unknowns, right? If it is known unknowns, right, these things mess with your trading strategy, right? So you can plan everything correctly. You can have a trading strategy which has the 80% odds of getting correct, but the moment it hits this massive emotional a mess, right, where people start going crazy in their trades, right, that is where it can wipe out, it can cause the odds to go against you really quickly. Okay, so it's important to always avoid these known unknowns, right? And how I do that is I look at the XC Forex economic calendar and I avoid the ones that are completely red in color, because these will definitely move the markets a lot. Okay, so Raylan is asking, what is the time frame for scalping? Right, usually for scalping, I actually stick away from the 5-minute charts. I will focus more on the 30 minutes to 1 hour chart, right? But I will look across many different charts to see what trading opportunities there are. Okay, will all these items in a trading strategy? Yes, you can combine all of this into a trading strategy. Now, this is where it gets a little bit more exciting, right? Let me see if I can have it for you here. Oops, sorry. Here, okay, there is one rule I go with, okay, and that is that 3 strikes you're out. Okay, 3 strikes you're out, meaning that if you trade, right, in a day and you have the first loss, you have the second loss, and you have 3 consecutive losses, right, I would get out of the trade. No, I would stop trading for the day. The reason why I stopped trading for the day is because I'm going to a revenge trading mode. Right, I'm going to try to make up for these losses with wins, and then hopefully try to win more. Right, and that is the problem. Right, so a very simple rule of thumb is that if you have 3 consecutive losses in a day, just call it a day, right there, and maybe look at the markets tomorrow. Okay, now a daily target, should we have or should we not have a daily target? How many of you guys have a daily target when you're trading? Now, Anna Maria is asking, is one general economic calendar or more different, right? I tend to look at the XE economic calendar. I find that they're the most comprehensive one. So I've looked around a few. Theirs are pretty good, yeah. Yamal is saying that he has a 5% daily target. Yasir also has a daily target. Waylo says he has a target. Bikram, in that case, if you are using all the different indicators and they're going in different directions, it means you don't trade. Only wait for your condition to be met before you trade. Okay? Yeah, Morel, that's interesting, right? Mel doesn't have a daily target. Who else has a daily target? Who has or who doesn't have a daily target? And if you have a daily target, what is your daily target? No, Venetia doesn't have a daily target. Roxanne, no. Anna Maria, no. Amelia, no. Don't have one. And Raylan got 5%. Edwin has 20 pips. Sam says he wants to make 1,500 a week. And James says he has 2%. Well, guys, what I can tell you is that don't have a daily target. Don't set a daily target, because if you have a daily target, it will lead you to do this. You start staring at the charts, right? Imagine now it's Christmas. The markets are moving very slowly. If the markets are not moving, right, you cannot trade. If the markets are moving, you can trade, right? So, you know, in a day where the markets don't move, there's no reason to trade. You should only trade what the market gives you. If a market gives you 10 opportunities to trade a day, yes, you trade all 10. But if a market gives you 0 opportunities to trade a day, right? If none of the markets meet your criteria to trade, you know, all the different criteria to trade, if none of them are met, then there is no reason to trade, right? Don't have a daily target. You know, it's good to have a rough idea of how much you're making, but there's no reason to have a daily target, right? Because if the markets don't move, there's no way you can trade. Okay, Sam, it's good to have an idea of how much you want to make, but you should never have a target, because if you have a target, you might start staring at the charts and you might start compromising on your entries to trade. Okay, guys? A good way to measure your progress, Anna Maria, is to just look at how much money you've made. Okay? Right, and see how much risk you're putting. What's your drawdown? What's your profit factor? Yeah, and then it's not much volatility in December. That is true, right? So guys, I'm gonna give not a giveaway. As part of a promotion, we're gonna throw in some special things. Okay. Before that, what I want you guys to do before we do anything is that please, if you haven't subscribed to the XC kind of webinar series, the ebook series, head over to this page, right? I just sent it to in the chat to everyone, and that is where you can get your ebook. I wrote a recent ebook on trade management and trading strategies, right? It looks something like this. It is the most, you know, it explains everything, like break even, partial profit, and all of that that I mentioned earlier, right? So yeah, that is me. You know, I'm the one who wrote it. And I wrote it because it's 40+ pages long, and we explain everything very, very clearly on on how to how to improve your trading, right? So please go sign up for it. It's free and get your access to it. Okay. Oh, Ruben just said that lost the sound. Right? Can you guys hear me? Okay. Okay. That's good. That's good. Yeah, so okay, you can hear me. That's good. That's good. I think you better check and check. I'm not sure who lost the sound over there. I saw someone, I think it was Ruben said lost the sound. Better check up on that. Okay, now guys, right? So what we're going to do next is the TFA Ultimate Trade Manager, which I showed you guys earlier. Okay, this is the one I told you about. You know, it is built by me, right? And it is the best way to trade. It allows you to do everything from entry, right? Entry, stop loss, take profit, you know, partial profit, right? You know, if you don't want the partial profit, you can, you know, you can delete it. Like in this case, I don't want it, I can close it off. I want it again, I can activate it. Break even, idea and validation, trailing stop, I can cancel a trade. You know, this is advanced trading method. You know, I can choose how much I want to risk in each trade, you know, 1% of my account, 2% of my account, or I can choose it in terms of how much money I want to risk. It will all be automatically calculated for you, right? I can say how much of my position should be closed off at each of the partial profits, you know, and I even have advanced things like, you know, hiding your stop loss from the broker. You know, Hex, you hate me for that, right? Putting a decoy stop loss and take profit, right? You know, even tracking the news, right? Is one of the most advanced trade managers out there, right? Even you do a simple search on Google, you know, best MT4 trade manager, you find this as the number one option. Okay, so how to get this, right? How to get this is that open a free account over here with XC, right? Please use this link for this webinar because if you don't have an account yet, right, please head over to here. Let me see if I can send it through. Yeah, please head over to here, xc.trade/webinar for life, right? Once you open an account, or if you have an existing account, right? If you have an existing account, deposit a minimum of $250, right? So if you have $1,000 in your current account, right? If you have $1,000 in your current account, right? Just you need to add in additional $250 more, right? And that will, once it is done, you email service@xc.com with the subject Christmas offer, right? Don't forget to include your account number and we will send this trade manager your way. And as a special Christmas offer, I'm going to throw in something special. Okay, what I'm going to throw in is I'm going to throw in the true RSI indicator I showed you guys in the past, right? So this is the true RSI indicator. The true RSI indicator is one way to help you improve the probability of your trades working well, right? So this is where it is. I'm just going to hide it over here, right? So this is where it is. So how the true RSI indicator works is that you can, you know, it tells you, okay, is there, and you know, must look whether there's a tick or cross. If there's a tick, it tells you that there's a secret support level that you need to look out for, right? So I will click on this, right? And this tells me that there's a secret resistance level. How does the secret resistance level look like? Let me show you. Okay, let me show you over here. So you can see that it has highlighted that price, you know, RSI dropped here and price dropped over here. Price dropped over here very nicely, and it also coincided with RSI dropping over here, right? Price dropping here very nicely, RSI also dropping here very nicely, right? Price dropping here very nicely, RSI dropping here very nicely. What is the hidden level? The hidden level is 65%, right? So this allows you to find a hidden level of RSI, right? So that, you know, it is not the, you know, a lot of people use, I think it's 75 or 80 or 80-20, 70-30, but this indicator tells you that the hidden level is actually 65%, right? So you can use it across many different, you know, you can use it across many different currencies, instruments, and you know, you can look at it in many different ways, right? So I can use RSI 21, I can use RSI 55, which is smaller, harder to see. RSI 13 is easier to see, right? So it tells you, you know, what are the key levels to look at. So what happens when RSI starts to approach this region again, right? If it reaches this region, there's a higher chance that it might reverse from here. Okay, of course, you still need to do your analysis, right? You still need to do your analysis, right? But this is just another way. Maybe this might add like 15% to your probability of being correct. Yes, the trade manager can work on a demo account. And Audrey, yes, you need to deposit another 250, right? And okay, one additional thing I'm going to do, because it's our last webinar, and thank you guys for all tuning in. I'm also going to throw in a true stochastic indicator, right? So just like the RSI, which I showed you, right, we can also see the stochastic, right? So the stochastic, it functions the same way as the RSI. It shows you that previously price bounced very nicely at this level. It also bounced nicely at this level, right? Bounced nicely here. It bounced nicely here. In this case, it was slightly beyond. Bounced nicely here. It bounced nicely over here. And last one, it bounced nicely here, and it bounced nicely here. What is the hidden level of support? The hidden level of support is 0 to 4.3%, right? You can see it's over here. Most people look at stochastic as 80-20, right? Vanita, yes, there'll be an explanation of how the indicators work. So on top of giving it to you, we will teach you how it works, right? So in this case, we find the probability of stochastic bouncing up to be around the 0 to 4%, not the 80-20 that people usually do. And if you know how to use this correctly, maybe you can add another 15% to your chances of being correct. You use the RSI, you use the RSI, you use the, in this case, you use the stochastic, you use support and resistance, you use price action, you use the Ichimoku, right? You use other stuff, throw it all together, and that is where you increase your probability altogether of being correct, right? So what we're doing here is we're providing you with the trading tools, to help you make this kind of better, higher probability trades. Okay, so you won't need to put in any extra, in that case, right? If you deposit $250 just for today and tomorrow, right? I think the offer would end by today or tomorrow, right? Is that as long as you fund $250, put a webinar, send an email to service@xe.com, and make sure your subject title says webinar Christmas offer, because this Christmas offer gives you the trade manager plus the true RSI indicator I showed you, plus the true stochastic indicator I showed you, and one last special thing, right? Yeah, Sam, we will send it over, and I will show you what is the last special thing that we will I'll show you what's the one last special thing that I'll be giving you, right? Let me show it to you over here, right? I got a video for you guys over here, right? And this is the what I call this is the private trading room, which we will be relaunching next month, right? And this is where you can find me every single day, right, with the rest of my team, teaching people how to trade. And this is where you can practice your trading, right? So imagine this is a chart. We draw a support level here, and maybe you have a question. You can ask, do you think this support area is good to get in at? You can highlight this text, you link it to the chart, you click it, and then you can confirm, right? So what happens is we send this message, and you can see that when I read the message, I can see that the chart will automatically light up. If you're practicing your Fibonacci, you might want to ask something like, it also lines up nicely with the 23.6% retracement, right? And how you're drawing it, you can highlight it, link it to the chart, select the 23.6%. You can see that it lights up when you hover over it. Click confirm, and you send the message through. So you can see when we are discussing, it becomes very clear, what support area and what retracement levels you are talking about. Okay, so this will be the next phase of the live trading sessions, which we will be doing, right? And this will give you the perfect opportunity right? To join us in a private trading room, to learn with us, to practice your trading strategies, whether you are trying to draw support and resistance, draw Fibonacci, draw harmonics, draw Elliott wave, you know, all of that you'll be able to practice in this trading room with us, right? So with the minimum deposit of $250 today, and if you open an account, right, you will get access to all of that, you know, plus the RSI, plus the stochastic, right, and plus the trading room, you know, the private trading room I talked to you about. Trading room here. Okay, just remember to use this webinar and Christmas offer in your subject title. All right, Sam, you're looking forward to the FIBO webinar. That is great, right? We should be covering that next month, right? So this will be my last webinar for the year, right? Because, you know, it's heading towards the Christmas season. It's time for us to rest a bit. I know a couple of you guys asked in the past for my Instagram account, right? Let me see if I have it here. I can just send you my Instagram handle. I think my Instagram handle is called a what is it called? Yeah. If you guys want to follow me on Instagram, right, I'm just gonna send it over here, right? I don't do much on it. Most of the time, I just post stuff about my cats. So yeah, if you wanna, yeah, if you wanna follow me on Instagram, you know, can just you know, just find me over there, right? Okay, guys. Now, so it's kind of random, but what's your opinion on copy trading? John is asking about copy trading. Yeah, it's copy trading is good, but you must know who you're copying, right? A lot of trading strategies there, if they're using martingale, they don't work, right? So if it looks too good to be true, it usually is not true, right? The best is to kind of follow people who use discretionary trading styles, because at least you know it's not like martingale, some kind of funny martingale strategy. Okay. So James, I think you're saying it only allows to pay in Kiwi dollars. Something's wrong with the platform. Are you trying to deposit funds in to XE, James? If you are, you know, you can deposit the equivalent of USD 250, right? So it can be, you know, it can be in Australian dollars, it can be in Kiwi dollars, you know, it does matter, right? Levon is asking, you know, how do you avoid the trade events taking place almost every day, right? Well, I just tend to look out for the high impact news events, right? So the high impact news events are those that are, you know, they usually are shaded in red on the XE website. You know, they're high impact. If they are low or medium impact, it doesn't really matter to me, right? And thank you, Venetia. I'm glad you have learned a lot. I'm glad that you're using the indicator well. Anna Maria is asking if I recommend a good book for beginners. There is a book I recommend, and it is called Trading in the Zone, right? Trading in the Zone. That is a pretty good book that you should all read. Okay. Now, guys, yeah, by Mark Douglas. That is exactly correct. The late Mark Douglas, God bless him. Right. So guys, you know, we've come towards the end of our webinar when we've overran by 1 hour, and it's nice to see that everyone is still with me, right? Yes, trading in the zone, but that's exactly not on the zone, Anna Maria. Trading in the zone. Okay, guys, if you have any last questions, now is your chance to ask me about them, right? And otherwise, what I recommend, what I kindly request you guys to do, right, is, you know, if you haven't, right, this is your last chance to kind of sign up for an XE account, right? Do me a favor in the in your question, where you're typing all your answers, right? Could you leave me a rating from 1 to 5, right? 1 being terrible, 5 being awesome. I always tell you guys that don't worry if you rate it as 1, right? I will not hunt you down. I might, but I'm a little bit busy this Christmas, right? And 5 is great. But also tell me, please share with me what you want me to cover next, right? What do you want me to cover next? And I will. We're going to collate all these responses and think about how we're going to create the educational series for the new year in 2021. Okay. Oh, okay. Thank you, Benita, rate me 10. Worker deposit in pounds, algorithmic trading. James is giving me a 10. Thank you guys. You guys are awesome. Right, you guys are awesome. You got trading strategies. VPS provider, you can ask the service at xe.com. I think they have some kind of special arrangement for VPS. Right. Way low, if you're saying it's 4+, I'm gonna guess it's 5, right? Admins give me a 10. Thank you guys. Thank you so much. I can see people are interested in algorithmic trading, commodities trading, risk management. Anna Maria just talked the entire webinar on risk management. Right. Bikram, right, asking if you're putting in the money, does it need to be exact? Or more or less, it should be okay, right? More is better. More is always better, right? Trading strategies that work, right? Edwin, I got it, right? That is where I'll be sharing with you. I use a lot of Fibonacci, right? And that is something which people who know me, they know that I'm a big fan of Fibonacci. Okay, I got the people saying it's 10. Thank you very much. And more. Really appreciate. Cheers. Thank you very much, guys. I'm glad you have rated me so well. Really appreciate your feedback, right? I really appreciate your feedback. It helps me a lot in designing the webinars and the educational sessions for you guys, because you're gonna see me for a long time. So it's good that we get to know one another, right? And yeah, it's gonna be an awesome 2021. Right, I look forward to really taking on the markets with you guys, trading together in the new private trading room that we're launching next month. So it's going to be pretty expensive to enter. So if you haven't have an XE account yet, please get the Christmas offer, because if you get the Christmas offer, you get access to the trading room, right? If not, I think it's gonna be a higher deposit amount that's required just to get access to it. So yeah, it's gonna be an awesome time together. Guys, thank you very much for staying with me for this entire webinar. James, maybe, or maybe the price might rise, I'm not sure. And thank you, George. I'm glad that you find the webinar great. Peter, yeah, that's it from me, right? That's it from me, guys. Is that ebook only for XE clients? No, if you're not an XE client, you can download it too. Okay. Thank you very much, everyone, and have a happy holidays. Right, stay safe, everyone. Wherever you are, right. Have a very, very blessed and Merry Christmas to come. Merry Christmas and a Happy New Year to come, guys. I'll see you guys next year. You can find me on Instagram. You can find me on XE Instagram. You can find me in a lot of places. But until then, cheers and peace out, my homies. Okay. Adios. Bye-bye.